Okay, welcome back. All right, so as you can see, the worksheet's a little different now. In the adjustment columns that I have here, here's our adjustments that we did. And I've added both columns in the trial balance. If all the accounts were in there, they equal. Our adjustment columns equal. Now this is where we extend into the income statement to see if we made any money, and we also extend the balance sheet. And if you remember last time, I had you draw a line through income summary. Well, we can't do that this time because we actually used income summary. Now there's a couple things. Again, income summary, income statement. So that account will be extended into the income statement. So I have extended all of our revenue and expenses and our cost account, the purchases, over into the income statement. And you'll notice now I have sales, which is the only credit, purchases, which is a cost, along with expenses, your contras. But we've also brought over income summary. And if you'll notice, it's in the debit balance. Let me explain this. We bought $158,300 worth of merchandise this fiscal period. But as I told you before up here, since we have less merchandise now, that means that we actually sold more than we bought. So when you add these two together and you get the 171,500 by adding these two, it says that we actually sold $171,500 worth of merchandise. But we only bought 158. That's where the other merchandise is, right here. So that it goes against us. If we sold it, it cost us money to buy it. That's why it's in with the expenses. Okay. So we add up all of our expenses. We bring down this, and you can see here that we sold, our sales were $352,600, and it cost us $285,444.90 to make that money. Used to be just expenses over here. Now it's the cost of merchandise sold right here. Okay. So we extend everything income summary and below into the income statement. The balance sheet, which I did not do, but if you look on page 400 and 401, which I told you to turn to, everything here is extended over into the balance sheet, and we've put these four ending balances right here. So they're already there. This minus this gives you this. What we had, what we used, gives us what we have left here. Okay? So we're going to add up all the balance sheet totals, and these are your totals down here. So as you remember, they don't equal. These two sets of columns don't equal. This is where we find out how much we made. Okay. No problem. Okay, so we have sales. No problem with the screen here. It's all right, we won't do that. 352,600 minus the 280, 544.90. And that comes to 72,055.10. If you remember, this is our net income. We sold more than we spent, so we made 72,055.10. When you subtract these two numbers as well, it's going to be the same amount, if you remember. If it's not, we have extended some things wrong. When you have an income, your numbers are on the outside. And then we just add them up. Those two columns will equal and these two columns will equal. Now, if you remember, we have to draw a red line here. And we have to draw a double line here. Just go to Format, Cells. Make sure you turn this to red. You want to double. And that gives you your red there, your double there. Again, Format, Cells. Make sure it's red. Do the double, put it there. And then we have to write in net income here. And if you're looking on page 400 and 401, you'll see that. These two columns are off because we made money. And if you remember, these two sets of columns are off because this 72,055.10 has to go in to our two owners' capital accounts. And it's not showing up in here. All right. And again, if you're looking at 400 and 401, you'll see how it's extended. Now, there's one thing I do want to mention up here. It is very possible that merchandise inventory at the end of the fiscal period could be more than at the beginning. And all that means is we bought more than we sold. And if we buy more than we sold, we're going to have a higher inventory. If that's the case, please make sure you're listening. If that's the case, we're going to have to add to merchandise inventory, which means we have to debit merchandise inventory in the adjustment and credit income summary. Again, if merchandise inventory is more at the end of the fiscal period, we have to debit merchandise inventory in the adjustment to show we're adding, and our little a will go here, and income summary will be a credit, which means we will extend it over here to a credit. Now, do they show you that in the book? Not sure. No, they don't. But just remember that. I'll probably write it down. If you have a problem in the book where merchandise inventory is more, I'll probably make you aware of that so you don't make that mistake. Here's to wrap it up. Please use had minus have equals used when you're finding the adjustments. Do not take these numbers and put them in the adjustments. Take these numbers right away, put them out in the balance sheet. Had minus have equals used. Now, hopefully that wasn't too bad. We probably will not be doing all of the study guide. We will just do the worksheet. It'll make it easier on everybody. If you have any questions, every one of these adjustments are shown in the book in chapter 17. And hopefully you won't have any problem doing it. So, I wish you good luck. If you have any questions, email me, call me, text me, and I will get you through this. All right, it's our first lesson. Hopefully it went all right. You can get back on your phone now, Steve. You guys have a good day. Let me know if you need any help.